Okay, guys, so let's talk about the weekend effect. And usually, when we talk about the weekend effect, it's in relation to the VIX. And the reason we want to know about the weekend effect is because a lot of people think that you can just sell options on a Friday or even on a Thursday before a long weekend that would include a Friday, Saturday, Sunday, and collect all that theta decay for free, right? This is the perception out there. Well, why don't I just sell options ahead of a period when the market is closed for 3 days and I'm going to just collect all that free premium? And so the weekend effect is really something that shows you that this isn't possible. And so you need to be aware of it. It's because of the fact that the option pricing model assumes constant decay each and every day of the 7-day week. But the fact is, we actually only trade 5 days a week. And in the case of a long weekend, let's say we're heading into a Thursday close, and we've got 3 days of weekend ahead of us, we need to recognize that the market makers aren't just going to sort of close up for business that Thursday night and then walk in on Monday with all their options down 3 full days of decay and go, oh my goodness, what are we going to do now? We're long all these options. Throughout the week, traders who pay attention, though, will notice that options actually decay a little bit more than their allotted daily decay, right? They actually erode a little bit more than they should according to our theta decay calculation. And that's because we're starting to take a little bit of the weekend out each and every day, and that gets more pronounced as you sort of move towards the Thursday, Friday of the week, where they take out a lot on that Friday in particular. So what that's called is taking the weekend out of the option prices. And I used to be a market maker for 13 years, so I remember doing this. You would just quite simply set your quoter to Monday's prices. So on Friday, if it looked like it was going to be a kind of a slow day, Friday morning or Friday mid-morning, you would just set your prices to the Monday. And you'd kind of trick the system into thinking it was Monday already. So it would price your options at what would be Monday's prices. So anyone who thinks that they can come in on Friday afternoon and scoop up all that juicy weekend decay is going to be mistaken most of the time. So let's look at a study that was done on the upper right of the chart here. We can see that on Mondays, you typically have the VIX up 57%. And on Fridays, you typically have it down. So these are the most of the week. So 66% on Fridays is down the most during the week. And so this is going to support the theory that, look, on Fridays, they're going to lower pricing, which the quoter doesn't realize what the market makers are doing, right? The VIX doesn't know that. So all it does is it recognizes losing volatility. If I take my option from $1 on Friday morning to 90 cents with the flick of a switch, suddenly the implied volatility on that option has dropped. So that's how the weekend effect works. It just drops, and then Monday morning when we open up and we're 90 cents on that option, right? Keep in mind the option price hasn't changed on the Monday morning. It's still the same as it was Friday afternoon because they took out that weekend effect and sort of priced things on Monday's prices. Suddenly that 90 cents in relation to fewer days to expiry reflects a higher implied volatility. So again, let's say that again. On the Friday morning, let's say that option's natural price would be $1. The market maker will drop those options to Monday's prices of 90 cents. That will bring the VIX down. We're using VIX as a general proxy, right? Because it's a good sort of reflection of volatility in general. But we could substitute that for Microsoft volatility, Amazon volatility, J&J volatility. We are going to bring those option prices down to Monday's prices, which makes the VIX drop. And then Monday morning, the option prices are the same, but with fewer days till expiry, that reflects a higher implied volatility, relative to Friday. And so if we look at the bottom right of this chart, this explains a little more, right? Because you might say, well, Hans, that's fine. On Mondays, the VIX is up, and Fridays, the VIX is down. But could that be because the market is up on Fridays, and the market is down on Mondays, right? So where's that correlation causation issue? Well, what explains that away is that when we look at Mondays, we see that the market, SPX, and the VIX are both up the most that ever happens on a Monday. And when they're both down, the VIX is down 73 times out of the sample that we've taken here. And what that is telling you is that because those things are normally inversely related, right? 80% of the time, the VIX is going to go up when the market goes down, and down when the market goes up. Because of that 80% correlation, this statistic here, the fact that the VIX and the SPX are normally both up on Monday, can really explain that something outside of the ordinary is happening, outside of market movement. And what that is the weekend effect. The weekend effect is playing out as those options reflect a lower volatility Friday afternoon and a higher volatility on Monday morning. So what that also means is that, generally speaking, coming off of a long weekend, for example, the VIX should be, when it's trading, say, a normal kind of 13, 14, 15 area, the VIX should be up about 1 full vol point. So a lot of the times I see people reflecting that the VIX is up on Monday morning, even though the market is up, and they're confused by that. Well, don't be confused any longer, because it's simply the weekend effect. Because typically we're taking that weekend out little by little by little each and every day. The decay is probably around 1.4 times what it should be on a typical day. So, and that all plays into the weekend effect. So I hope that explains things. What that also might inform you to do is that, based on this information now, knowing that they kind of crush volatility into the weekend and then bring it back up on Mondays, is that if you're shorting a lot of options for income generation type strategies, it's often better to close those strategies on the Friday, right? A lot of people would think, well, why don't I close them on the Monday after all that extra theta decay? Well, that's not going to happen. Close them on the Monday, take out that weekend gap potential, right? Remember, that's what you're doing. You're taking some risk off the table. You're taking off some gamma risk. When you take off your position, you close your position. So instead of waiting till the Monday, do it on the Friday. And when you're looking to open a new position that is going to look to benefit from theta decay, do it on the Monday. Why not? Wait till that weekend gap potential moves behind you, and then initiate that position on the Monday. So initiate on Mondays, remove on Fridays, might be one way to play the overall weekend effect in option decay. Okay, hope you guys understood all that and enjoyed it, and we'll see you in the next lesson.